Hello everyone and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today, on November 21st, 2025, we are diving deep into one of the most talked about stocks this week, Alphabet, ticker symbol Google. It has been an absolutely wild ride, with monumental news causing a historic breakout followed by a dramatic reversal. First, let's cover the major headlines that have been driving this volatility. The primary catalyst for the bulls was the launch of Google's Gemini 3, a powerful new AI model that sent waves of excitement through the market, fueling beliefs that Google is a dominant force in the AI race. This was compounded by the massive news that Warren Buffett's Berkshire Hathaway disclosed a new multi-billion-dollar stake in the company, a significant vote of confidence from one of the world's most respected investors. These events, combined with strong Q3 revenue, pushed the stock to surge over 6% just 2 days ago, smashing through the $300 level for the first time in history. However, the narrative isn't entirely one-sided. There are still significant headwinds to consider, including ongoing antitrust lawsuits and regulatory scrutiny, which pose a long-term risk to the company's business structure. Furthermore, after such a parabolic move, concerns about lofty tech valuations are resurfacing across the broader market, which often leads to profit-taking. Now, let's see how this clash of bullish and bearish sentiment has played out on the charts. Looking at the daily chart, we can see a clear and powerful uptrend that has been in place since the lows back in April of this year, where the stock was trading around the $140 level. It has been a fantastic run for long-term holders, more than doubling in just over 6 months. Now, let's zoom in on the action from this week, which is where the story gets incredibly interesting. On November 19th, you can see this massive green candle, a direct reflection of the Gemini 3 and Buffett news we just discussed. The stock gapped up and soared to an intraday high of over $303. But what happened the very next day on November 20th is critical for every trader to understand. We saw a huge red candle that completely engulfed the gains from the day before. The stock opened at a new all-time high of $306.42 and then sold off relentlessly throughout the session, closing below $290. This pattern is a classic bearish reversal signal, often called a bearish engulfing or a dark cloud cover, and it occurred on extremely high volume, which gives the signal more weight. This indicates that after the euphoric buying, sellers took firm control, and many buyers who bought the top are now underwater. From this daily perspective, we have some very clear levels to watch. The all-time high of $306.42 is now the ultimate resistance level to beat. The psychological $300 mark also serves as a key resistance area. For support, the most critical zone is the top of that gap up, roughly between $285 and $287. If the price breaks below this level, it would confirm the bearish reversal and could signal a much deeper pullback is coming. A secondary support level can be found in the consolidation area around $275. To get a better sense of the intraday battle, let's switch to the 1-hour chart and focus on the last 3 days. Here you can see the steady climb on November 19th, with strong buying pressure session after session. Then, look at the first hour of trading on November 20th. That massive red candle shows the gap up to the all-time high followed by an immediate and brutal rejection. Throughout the rest of the day, every small bounce was sold into, showing that sellers were firmly in control and momentum had completely shifted. The price sliced through intraday support levels one by one, culminating in a close near the lows of the day. This intraday action strongly supports the bearish reversal thesis we saw on the daily chart. Now let's drill down to the 15-minute chart to analyze the most recent price action from yesterday and the pre-market activity for today, November 21st. Yesterday's chart shows the waterfall decline in stark detail, with very little buying support able to hold for long. The selling pressure was immense, especially in the afternoon session where the price broke down below $300 and never looked back. The day ended with a weak close, right near the session lows around the $289 mark. Looking at the after-hours and early pre-market candles from today, the price is hovering just below that $290 level. There hasn't been a significant bounce or further breakdown just yet, which suggests the market is in a state of indecision ahead of the opening bell. How the price reacts at the market open will be extremely telling. Will buyers step in to defend the critical $285 support level, or will sellers continue to press their advantage? The first hour of trading today will likely set the tone for the rest of the day and possibly the week. So, to recap everything and provide some potential scenarios, let's bring the daily chart back up. Your key resistance is the all-time high region of $300 to $306.42. Your most important make-or-break support level is the top of the price gap between $285 and $287. So, what are the possibilities from here? Let's outline a bullish and a bearish scenario. The bullish case, which I'd give about a 40% probability in the immediate short term, would involve the price finding strong support at the $285 to $287 area. If buyers step in here and push the price back above yesterday's low of $288.67, and especially back above $293, it would suggest the sell-off was merely aggressive profit-taking and the uptrend could resume. To be truly bullish again, we would need to see a confident break and hold back above the $300 psychological level. The bearish case, which I see as more likely in the short term with a 60% probability, is that the reversal candle from yesterday signals the start of a deeper correction. If the price opens weak and breaks below the $285 support level, it would trap all the buyers from the breakout and likely trigger more selling. In this scenario, the next logical targets for bears would be the support zone around $275 and potentially even lower if the selling momentum is strong. The key thing to watch for today is whether that $285 support level holds. Watch the volume at the open. High volume on a move down would add significant weight to the bearish case. Thank you for joining me on Explain the Charts for this breakdown of Google. Please remember, this content is for informational purposes only and is not financial advice. Always conduct your own thorough research and risk analysis before making any investment decisions. Don't forget to like and subscribe for more in-depth chart analysis.